Reading about stop losses and actually taking one when you're wrong are two entirely different skills, and only one of them makes you money. You can understand your trading plan perfectly. You can explain it, know exactly why each rule exists. But understanding and executing are not the same thing. Understanding happens when you're calm. Execution happens when you're not. And the gap between those two states is where most traders get stuck. The execution gap isn't about intelligence. It's about pressure. Your plan makes perfect sense when you're reviewing it on Sunday morning. The rules are clear. The logic is sound. You know what you're supposed to do. But then the market opens. You're 3 trades down. Your stop is about to get hit on a 4th. And in that moment, understanding the plan doesn't help you. Because your brain isn't asking what the plan says. It's asking how to make the pain stop, and those are very different questions. This is the test most traders don't prepare for. They think that if they understand their plan well enough, they'll follow it. But execution under pressure isn't a comprehension problem. It's a behavioral problem. And behavior under stress doesn't care how smart you are or how well you understand the theory. It cares about what feels safe right now. And following your plan when you're scared rarely feels safe. It feels like giving up control. Like trusting a process that isn't working in the moment. Like choosing structure over relief. That's why simplicity matters. Not because simple plans are better at predicting the market. Because simple plans require less willpower to execute. Every additional rule, every judgment call, every interpretation you have to make under pressure is a drain on your emotional capacity. And when you're down and stressed, that capacity is already running low. A complex plan that you understand completely will still fail you if it requires more emotional bandwidth than you have left. A simple plan that you can execute on autopilot will keep you in the game. Trust is the bridge between understanding and execution. But trust doesn't come from understanding the plan. It comes from proving to yourself that you can follow it when it's uncomfortable. And that proof takes time. Most traders give their plan 20 trades and expect to trust it. But 20 trades isn't enough to build trust. It's barely enough to expose you to the situations where the plan gets tested. Trust comes somewhere between 20 and 30 executions. Not perfect trades. Perfect executions. Trades where you did exactly what the plan said, regardless of the outcome. This is where most traders quit. They follow the plan for 10 trades. It doesn't work the way they hoped, so they tweak it. But what they're really doing is resetting the trust-building process. Because now they're testing a different plan. They'll never know if the original worked because they didn't give it time to prove itself. They optimized before trusting. And optimization before trust is just another way of saying you're not willing to follow through. The neural pathway to automatic execution is built through repetition, not through understanding. You don't think your way into execution. You repeat your way into it. Every time you follow the plan when it's uncomfortable, you're strengthening the pathway. Every time you override it, you're reinforcing the habit of negotiation. And negotiation is the enemy of execution. Because once you start negotiating with yourself about whether this trade qualifies or whether this stop really needs to be taken, you've already left the plan. You're back to making decisions under pressure. And that's exactly what the plan was supposed to prevent. Here's the shift. Stop measuring your success by whether the plan made you money. Start measuring it by whether you followed the plan. Did you take the trade when the conditions were met? Did you take the stop when it was hit? Did you let the winner run to the target? Those are the only questions that matter in the first 20 to 30 trades. Not whether you were right, whether you were consistent. Because consistency is what builds trust. And trust is what makes execution possible when understanding isn't enough. Most traders want proof that the plan works before they commit to it. But the plan can't prove itself until you've executed it enough times to give it a fair test. And you won't execute it enough times unless you trust it. That's the loop. And the only way out is to commit to execution before you have proof. To follow the plan not because you're sure it will work, but because you're testing whether you can do what you said you'd do when it's hard. That's the real test. Not whether the plan is good, whether you're capable of following it. Understanding your plan is the starting point. Following it is the work. And the gap between the two is where you either become a trader or stay someone who knows a lot about trading.